Welcome to the Deep Dive. We're here to make sense of the complex stuff happening out there. And this time, we're really digging into a roller coaster week in the stock market, ending with that big sell-off last Friday, August 1st.
It was quite something.
Yeah. Our goal, unpack what drove all that volatility, look at some surprising shifts, and, figure out what it means for your portfolio. Let's dive in.
Absolutely. It was definitely a week that kept everyone guessing. Monday actually started pretty calm, almost deceptive. There was that new U.S.-EU trade framework, which eased tariff fears for a moment. Automakers, for example, got a bit of a lift.
Fleeting optimism, then, because that didn't last long.
No, it really didn't. By Tuesday, Wednesday, the mood soured fast.
So what was behind that shift? What happened?
Well, there was a few things hitting at once. We started getting some pretty disappointing earnings reports. United Health, UPS, they were warning about economic uncertainty. And then Whirlpool, they plunged after cutting their forecast, and they specifically pointed to tariff costs.
Oh, okay. So tariffs were already biting, even before the big news later.
Exactly.
Okay.
And adding to that, those U.S.-China trade talks in Stockholm, they ended without extending that tariff truce, that temporary pause. So, boom, fears of new tariffs were right back on the table.
Right. And then Thursday and Friday delivered that real 1-2 punch. Talk us through Thursday first.
Yeah, Thursday was quite the reversal. President Trump announced sweeping new tariffs, not just China, but 66 countries, effective August 7th. I think many expected maybe an extension of the truce, but instead it was this broad expansion. Imports from Europe, Asia, dozens hit.
Wow, okay. And just when you thought it couldn't get worse, Friday's jobs report.
Oh, yeah, Friday. That just blindsided investors. Only 73,000 jobs added in July. The expectation was, what, 150K? Something like that?
Way off.
Way off. And even worse, they revised the prior months down by a massive 258,000 jobs. Unemployment actually ticked up to 4.2%.
Oof. That combination must have just sent shivers through the market.
It really did. The impact was immediate and pretty severe. All the major indexes dropped significantly. S&P 500 down 2.4% for the week. NASDAQ off 2.2%. Dow lost 2.9%. Snapped those multi-week winning streaks.
A rough end to the week for sure. But you hinted earlier, amid all that red, some companies actually did okay. Even well.
Yeah, that's where the earnings picture gets really interesting. It was like the tale of two markets, almost. You had some big tech names showing incredible resilience. Meta Platforms, for instance, they surged like 8% for the week.
8% in that market. How?
Blowout earnings, driven mostly by their AI-powered ad targeting. And Microsoft was another one, gained about 4%. Their Azure cloud revenue was booming, up 34%. Plus, they announced this huge $30 billion investment in AI infrastructure.
So it shows that even in chaos, things like core tech infrastructure, real AI advantages, they almost become defensive.
Sort of, yeah. They held on to most of those gains even on Friday, which tells you something. But it wasn't all good news in big tech.
Right, like Amazon.
Exactly. Amazon plunged 8.3% just on Friday. That was its worst single day in over a year.
Why the big drop there?
A couple things. Slowing growth in AWS, their cloud unit, and just their sheer exposure to those new tariffs hitting consumer goods. Apple also dipped about 2.5% Friday, also on tariff concerns. And it wasn't just tech feeling the pain. Other sectors, healthcare, energy, they had disappointing earnings too, adding to the overall slide.
Okay, so with the market clearly rattled, all eyes must have turned to the Fed. They met this week too, right? They held rates steady.
They did, yeah. Kept the target range at 4.25% to 4.50%. But the really significant detail, the thing people jumped on, was the dissent.
Dissent? What happened?
Two Fed officials actually voted to cut rates.
Yeah.
That's highly unusual. First time we've seen dissents like that in over 30 years.
30 years, wow. So a real split within the Fed.
Definitely signals a fracture, yeah. And it makes future policy maybe a bit more unpredictable. Initially, the market was kind of disappointed. They didn't signal cuts more strongly. But then came Friday's jobs report.
And that changed everything.
Completely. It just drastically shifted expectations. The probability of a September rate cut, it shot up to over 80%. It was like 40% the day before. Treasury yields plunged as traders basically bet the Fed's hand was forced, that they'd have to ease soon.
Okay, so tons of moving pieces. Uncertainty high. How should people, think about navigating this? Let's start with short-term traders.
Yeah, for short-term folks, the message is probably caution. Maybe tighten up those stop losses, the preset orders to sell if a stock drops, possibly look at more defensive positions. Those quality growth names we mentioned, Meta, Microsoft, they might be relative safe havens. But sector's really sensitive to trade. They could see more pressure.
Makes sense. And what about long-term investors? Is it time to panic?
Definitely not panic. The key for long-term investors is not to overreact to these short-term swings. This pick was rough, but it doesn't necessarily kill the long-term bull case. It's more a time to maybe reevaluate your diversification. Make sure you're focused on fundamentally strong companies.
So keep your cool, focus on quality.
Pretty much. And maybe use strategies like dollar-cost averaging investing that fixed amount regularly. It can help you accumulate shares of quality companies, maybe like Meta, Microsoft, or even grab some Amazon or Tesla if they dip further. Build a robust portfolio.
Right. Build for different scenarios. So this week really hammered home just how sensitive the market is right now. Sensitive to economic data, sensitive to policy shifts like tariffs, and you've got the Fed juggling inflation concerns, a cooling labor market, and now these escalating trade fights. It leaves you wondering, how do you balance being agile, reacting to the short-term noise, while still keeping conviction in your long-term investment plan? Something to think about.